Hi, this is Jackie Ann Patterson, and I'm here to record a video to show you how to use the Divergence-Alerts website to find and profit from MACD divergences on the stock market. So the thing about MACD divergences is that it can be a very powerful signal, especially as a buy signal in the US stock and ETF market. And it's got some quirks, and it's also got some context where the signals perform better in certain market conditions than in other market conditions. So if you're interested in using divergent signals in your trading, it's important to understand the overall market context. It's important to understand the overall numbers of divergences in the stock market. And it's important to be able to find out which stocks and ETFs have divergences at this time. So this website is devoted to helping you figure that out. And this video is going to show you how to use it. So the first step for subscribers is to log in. If you're not a subscriber, you can click here and find out how to become a subscriber. Assuming that everyone is, I'm going to log in. I am going to log in as a platinum subscriber. What I show you will work for both platinum and gold subscribers. And I will make another video that shows the features available to platinum subscribers only. Okay, having logged in, you can see the menu of the different selections across the top. And one of those items that I would suggest as the first place to start when looking at this website is to look at the divergence count indicator. The divergence count indicator shows you whether the so-called buying window is open or closed, and for the P zones and the N zones. And what that means, the P zone is the number of positive divergences counted across all the stocks that I track in the stock market, which is about 3,300, and then doing a 20-day moving average. And historically, when there's been large numbers of positive divergences, that has been a more favorable time to buy. And I would call this the buying window being open. And that's the situation that we're in right now. The P zone buying window is open because we have high numbers of positive divergences. Looking at negative divergences, the N zone buying window is closed because we have high numbers of negative divergences. So the absolutely best time to buy would be when there's high numbers of positive divergences and low numbers of negative divergences. That has historically worked out the best. It's not quite what we have right now, but this page on the website gives you the very quick at-a-glance overview of what that status is of the overall count of divergences across the entire stock market. So from here, looking at this, we can say, okay, the P zone buying window is open. I'd like to go look for positive divergences on US stocks. So you could take a top-down approach and look at the ETFs. So going to the ETFs page. And what this brings up is a matrix. And this matrix has tickers down one side, and it's got more entries than 30. So on almost all of these, you have to immediately hit all, and it will flesh out the complete list of ETFs. And each of these columns is a different type of MACD divergence signals. So it's M for MACD, and then the next letter is either lines or histogram, either L for lines, H for histogram, and then it's either P for positive or N for negative, and then it's either W for weekly or D for daily. And this is the same order as in the spreadsheet. I recorded another video that shows you how to use a spreadsheet to go looking for the current ETFs. And that spreadsheet, I have to say, is prettier than looking at this website, but they both contain the same information and they both contain the same functionality. So each of these intersections where there's a type of signal, say the MACD lines positive divergence on the weekly chart. There's a ticker, SRTY. We have the date of the most recent divergence, and we have it color-coded in green for positive divergences and red for negative divergences. And so we can see that this SRTY had a positive divergence on the weekly chart this past Friday on October 9th, and that this is actually the ProShares Ultra Pro short Russell. So this is actually kind of a bearish signal to have a positive divergence on an ultra short. Looking for, say, unreserved, a positive bullish signal, since we were looking at the DCI having an open, having a buying window open, you can click on one of these column headings to have it sort. So one click, it sorted oldest to newest. Don't want that. Second click, we've got newest to oldest. So here we're seeing a list of ETFs which have a MACD lines positive divergence on the daily chart. And you can see that we've got this list of tickers, or looking at this list of names, there's a whole bunch of commodity funds. And if you want to take a quick look at what's going on, say, okay, is oil coming out of its major funk here, we can click on the stock chart link and it'll bring up the stock chart for the particular thing we're looking at. And eventually the ads will finish loading and we can scroll down to see the MACD. So in this case, we can see that the price has come up from the deep, deep bottom, and then it's made kind of a pullback. And on this double bottom pullback, looks like it went down. The price went down to a lower low, but the MACD did not go down to a lower low. So it's kind of hinting that this pullback may not be as extreme as it seems, and maybe it's time for oil to be perking up. On the ETFs page, I want to show you how you can do a top-down analysis. So each row is a particular ETF, and one of the columns here is holdings. So if you find something interesting about an ETF, say ITB here has some fairly recent negative divergences on the daily chart, and you can double click down in if you're interested in what part of US home construction might be driving these negative divergences. Click on the link for holds, and this will bring up a similar table that includes all the stocks that are the holdings of the ETF ITB. And again, be sure to show more than 30 entries because some of these have quite a few. And here you get a very similar matrix with the ticker number and the different divergence types, the name, the stock charts, key statistics, and a little bit more data about each one. So in this way, you can drill down and you can see that the divergences that were happening, and we can go ahead and sort. The divergences that were happening on 10/6 up at the ETF level are probably driven by some of the big holdings of Lennar and MDC, Pulte Group, DR Holton. So we're seeing quite a few of negative divergences on the big players in the home construction. So we're able to come at that from a top-down view from the ETFs page. Okay, moving over to let's look at this indicator for the Qs. This page for the Qs is one of many holding sheets for the ETF holdings. So you can see that here we've got the whole different tickers that are inside the Qs, and we have the dates of the most recent divergences. So looking again at the most recent divergences on the daily chart, we can see that ADP was happening at the end of September. DXCM came up as recently as last Wednesday. And so we can take a look at, say, DXCM. If we want to know more about this, we can take a look at its stock chart and see that it's got that positive divergence signal happening. And we can also take a look at, for stocks, we can look at its key statistics and have a look at how Yahoo reports the items from the Edgar database, and then its recent um, profit margins and growth and debt load, cash flow, dividends, if there are any, short load. So this can be more information to help you make a good decision about investing in a particular area. And I would like to emphasize this, that divergence just by itself is not enough, in my opinion, to make a good investment or even a good trading decision. I think that it's important to look at the overall market, which is why I send out an overall market status to subscribers each week. And it's also important to look at what's happening in the sector and what's happening with the divergences across the entire stock market to get ideas about when is a good time to really do the trade. So other items that we have on the website, one is the US stocks. And this sheet can sometimes take quite a while to load. And it has the complete list of my 3,000 stocks that I'm tracking for divergences. And again, it's sortable, so you can see which stocks have a divergence. And as I'm pausing, as I'm looking at this, and I'm seeing it's sifting through 6,000 stocks. You know what? I made this much more focused in a recent revision, and it is now 3,000 stocks. So I'm going to change that number on the website so that it reflects the current reality. Okay, looking at the US stocks, again, here we have the different types of divergences and the different sorting mechanism that's possible. And we can go down and look at the different possibilities that have divergences. And in the spreadsheet example, we picked on KALU, which looked like a pretty good possibility. What is hard to see here is looking at the percentage change of how did this stock do lately, particularly when looking at a weekly signal. You want to know which ones had an up day Friday or which ones had a down day, because you kind of want the current price action to be going in favor of the divergence. And with the spreadsheet, I was able to take cut and paste very simply the list of tickers and stick them into TradeStation. Here you can go stock chart by stock chart, or type them into your own trading software as you would like. So here's the Kaiser aluminum, and actually we're looking at the daily chart, and this had been a weekly divergence. So we can change the stock charts over to weekly. So we can have a look at the MACD divergence, nice add on the weekly charts. Okay, coming back to the website, there are alerts for daily and weekly. We're right here by the weekly alerts. And you can download the spreadsheet either on the weekly or the daily. And inside the spreadsheet are the scorecards, like I showed you for ETFs, and the different holdings of the ETFs and the US stocks. And there's also sheets that show you the alerts directly off of the scanner. And one of the really interesting things about that are these tomorrow alerts, because these are showing you a price where the next divergence will happen. So with IHF, the mathematical calculation is when the price hits 206.04, that's going to make an MACD line's negative divergence, which would be a signal to short. Now, the short signals are very kind of dangerous, unreliable here, so I wouldn't say jump on that. But say if you held IHF F and you're looking for a time to sell, you can know that this price is going to be a good point to put a stop loss. And likewise, if there's buy signals, you can set a price to buy on the tomorrow signal. I'm looking down to see if we've got another one. A lot of these are upcoming negative divergences, just the case where the market is now. But you can see on the individual stocks that, we have the fully formed divergences, say on BMY, and you've got a current price, you've got an ATR, an average true range calculation. So assuming a 3 ATR stop, it calculates what the stop price would be. And assuming you wanted to risk $100 between the stop price and the current price, then it calculates the number of shares that would do that. And you could multiply that to whatever you desire. So this is what's shown in the weekly alerts. You can also download CSV files of these alerts if you want to hang on to them, or you want to do your own sorts of sorting through them. Other elements, there's the rotation, which is covered in another video. Learn has a whole bunch of information, videos and reports. So everything on here is added as a bonus to annual subscribers at the platinum level. And then other subscribers can click to purchase the video series that teaches you in depth about MACD and various reports about MACD, and also the TradeStation add-ons that help you to scan for the MACD, and the exit strategy report. So I've got a whole lot of information here under Learn that you can access to go more in depth on these various types of signals. And then the help page is free to all, and that gives you a giant in-depth overview of using this website and starting from the tops of key habits of successful investors, looking at the overall context, seeing what the ETFs are doing, then drilling down into the divergences and looking at what's going on market-wide with the divergence count indicator. What else can I show you how to use? One is the diary it's got diary entries of some of my recent trades. So I'll show you a couple that are open. Obviously, I'm holding these positions at the time of the video and may sell them before you are watching this. Not meant as any solicitation to buy, just trying to be educational. So this diary shows you that when there was a divergence, that I bought IVC, and that has actually run up nicely since then, and also SFM. And you'll notice that these divergences came kind of at the bottom of the COVID crisis. So this was definitely pointing out a good time to buy lately. SFM has run up and didn't get a prompt sell signal, so it's bouncing back down. And then there are further buys and sells that happened in the past. Some closed out for a gain. Keep scrolling until I can find one closed out for a loss. There's one. So it's by no means foolproof, but it does give you some valid signals. And I'm showing you what I'm trading. Ooh, there's one that really went awry. The oil falling apart. So it's important to have a stop loss. And it's also important to have patience because it can take a while for these things to play out. To get what I'm trading on is a positive divergence buy signal and waiting for the matching negative divergence to close out the trade. There are some quicker exit signals that may get you a smaller profit more quickly, turn your money over. It's up to you to decide what style is really best for you. Okay, so this is kind of the sorts of things that are on the diary page, give you some background information, some examples of how these trades have gone, and what happens when a real person trades them. Um, so you can also learn from my mistakes. Let's see, we talked about the DCI page. The daily has, similar to the weekly, has the spreadsheet. It's got ETF alerts, and it's got US stock alerts where the divergences have turned up in the scanner. And then the backtest shows you the most recent backtest results. And be sure on this to set this to all so that you can see all the different entries in the back testing. Then you can see they're color coded. They're green for positive expectancy and positive average gain, and they're red for negative expectancy, negative average gain. And when I ran these last was in September 18th of 2020. And what was doing well at that time was the MACD lines divergences on the weekly chart of US stocks. So there's a reason why I go after that. The average gain was 140%. This includes open trades and a positive expectancy. Now this is going across, look at how many trades this are. So this is going across a lot of stocks, and not all are open, many are open, and this is more than I would expect an individual to be trading. So you can't really look at this and say this is not a track record of how it would do. And the diary is also not a track record. That's very sparse. So this has too many, that has too few. Your reality is going to be somewhere in between these two. But the general trend you can see is that the long trades have done well. The short trades have not done well. And I kind of wish I had a snapshot at the depth of the COVID crisis, because the short trades still didn't do well at that time. It's really hard to get the exit signal in time to make money on shorting the market. Okay, coming back to the overall website, I hope this has shown you how you can use it to identify good times to do divergence trades with the DCI, and then how to find them with the ETFs and the USTKS sheets. And if you have any questions, please drop me a line or leave a comment on the video. Okay, thanks for watching, and do take care.